Aotearoa, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The consequences of US policy changes are now starting to show up in the data. The big overnight news is that the first quarter 2025 US GDP report. The American economy shrank at an annualised rate of 0.3% in the period, the first retreat since the first quarter of 2022. This was a sharp reversal from the 2.4% growth in the prior quarter, and well below market expectations of a 0.3% growth. A surge in imports was one key factor, as businesses rushed to stockpile goods in anticipation of higher costs from the tariff announcements. But that didn't include consumers, because their spending growth cooled to 1.8%, the slowest pace since the second quarter of 2023. Federal government spending fell 5.1%, the steepest drop since the first quarter of 2022. That cooled consumer spending reversed in March, with a tariff stocking up rise for them too, especially for cars ahead of the April cost increases. PCE inflation cooled a little, but not yet back to mid-2024 levels. Personal disposable income rose less than spending in March. Financial markets reacted negatively to the larger-than-expected GDP shifts. This weekend, we get the April non-farm payrolls report, and currently markets expect a smallish rise of 130,000. But that may be an overestimate. The ADP survey of private businesses only added 62,000 workers to their payrolls in April, less than half of the downwardly revised 147,000 payroll increase in March, and well below the expectations of 115,000. April data is weaker than for March, so prospects for the second quarter of 2025 economic activity do not look flash for the giant US economy. US mortgage applications sank again last week, and for a third straight week. A pullback in new orders and production levels in April saw the Chicago PMI contract for its 17th consecutive month. But US pending home sales jumped in March from February, ahead of tariffs which were expected to make new home purchases more expensive. But they're still 0.6% lower than year-ago levels, which itself was a weak base. And still in the US, it is becoming clearer who will be paying the tariffs. Retail giant Walmart has raised the white flag, telling Chinese suppliers to resume shipments, suggesting it to them that it will absorb the new border costs. Of course, they will be passed on to consumers. Across the Pacific, we're looking ahead to the Bank of Japan rate decision later today. Although the landscape has changed there, they are now unlikely to raise their 0.5% policy rate now. And Japan's industrial production was weakish in March, coming in lower than expected from the prior month to be little change from March a year ago. At the same time, they reported retail sales 3.1% ahead of the same month a year ago, but that was lower than expected, also with current weakness from February. Nearby, Korea said their industrial production came in better than expected in March, although not as strong as for February. Korean March retail sales, however, gave back a small bit of their outsized rise in February. In China, their May Day holiday starts today and runs through May the 5th. They were required to work on April the 27th, a Sunday, to give them 5 consecutive days of rest. They may not be resting. Travel bookings for domestic trips are up through the roof this year. Don't forget, in China, the standard working week is 8 hours a day, 40 hours a week, which is a 5-day work week, Monday to Friday. However, it is important to note that the 996 work culture, where employees work from 9 a.m. to 9 p.m. 6 days a week, is a common reality, especially in their tech industry. Once again, the official factory PMI for China came in with a small contraction and a definite slowing, while the private Caixin version came in with a small expansion, although a slight slowing also. Separately, the official services PMI came in with a slightly better expansion. In all cases, new order levels retreated. In Europe, the German economy expanded slightly in the first quarter of 2025 from the fourth quarter of 2024. Inflation was steady in April at 2.2%, and retail sales were up 2.2% on a volume basis from March a year ago, but little change from February. All that helped the overall EU GDP to expand 1.4% in the first quarter of 2025, up 0.4% from the prior quarter. It is rare that the EU outperforms the US, And this isn't so much because the EU is rising, more that the US is falling. Whichever way you slice it, Australia's inflation came in at 2.4% in March from a year ago. This was true for the quarterly CPI and the monthly inflation indicator. Both were little changed from their respective prior releases. There is now talk of a post-election rate cut from the current 4.10% cash rate target. And pre-tariff shoring up saw air cargo demand spike in March, led by activity in the Asia-Pacific region and the US. Come April and May, this spike is expected to reverse quite sharply. Passenger air travel is flattening out right now, especially in North America, but it is being held up by strong China and India domestic demand and still good Asia-Pacific international demand. The US Treasury 10-year yield is now at 4.17%, unchanged from this time yesterday, and the price of gold will start today at $3,309 an ounce, down $10 from yesterday. And oil prices are down more than $2 to just under $58.50 a barrel in the US, while the international Brent price is down more than $3, now just over $61 a barrel. These are 4-year lows, down to levels last seen in April 2021. And the Kiwi dollar is now at 59.4 US cents, unchanged from yesterday at this time. Against the Aussie, we're down 20 basis points at 98.2 Australian cents. Against the euro, we're little changed to 52.3 euro cents. That all means our trade-weighted index starts today at just on 67.6 and essentially unchanged. And the Bitcoin price starts today down 1.3% from yesterday at $94,182. Volatility over the past 24 hours has been modest, at plus or minus 1.2%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.